explaining you what is ITM means in the money, ATM at the money, and OTM out of the money concepts. So see, let's assume if you are a buyer of an option, okay, and you are bullish in the market, right? So let's say the current market price is 1000 rupees and you bought something at 800 rupees. So obviously you will be in profit of plus 200 rupees, right? So if you are feeling you are profitable, that price will be called in the money price. If you are feeling, no profit no loss scenario, let's say right now the price is 1000 rupees and you bought something at 1000 rupees, so no profit no loss scenario, that will be at the money concept. Okay. And if you bought something as 1200 rupees and the market price is running 1000 rupees, so you will feel some sort of loss, right? So whenever you feel some sort of loss, you will having that concept at out the money. Okay, so this is out the money option, this will be in the money option, and sorry, at the money option, and this will be in the money option. Okay. Similarly, here you understand. Let's say you are bearish in the market. You are going to, sell the market. So just try to understand this. Here, let's say market price is 2000 rupees, and let's say you shorted the market at 3000, and right now it reached 2000 rupees. So you are in 1000 rupees profit, right? Means 100 means 1000 point profit, right? So whenever you are shorting at 3000 and right now the price reached to 2000, means when you feel profitable, you are in the money option. Let's say at 2000 rupees you shorted and right now the market price is also 2000, no profit no loss, then add the money option. And let's say you sold something at 1000 rupees, then after later on that asset have a price of 2000 rupees, means you will feel some sort of loss, then out of the money, OTM. So let me take you to this chart and let me try to explain you this thing. For example, here, this is 30th September, and let's say here at almost 10:33 in the morning, we seen there is a flag and pole pattern, and flag and pole is a bullish pattern, means it's a continuation pattern, means market may go up from here. So let's say you are planning a buy trade. So this is the bank nifty spot chart and the market price was 38,000. So let's assume there are three different traders, trader A, trader B, and trader C. So trader A is going for in the money, trader B going for add the money, and trader 3 is going for OTM out of the money option. Okay. So here you see 38,000, right? So what is the in the money for 38,000? If you buy something at 37,500 and market is right now running at 38,000, like at this level at 10:33, you will feel profit, right? So this will be in the money option. If 38,000 is the current market price and you also buying an option who's it's in the back side, you see the 38,000 call. So when you buy 38,000 option, strike price option, then obviously this is at the money. And if you buy something, let's say 38,500 you bought, and that asset is now trading at 38,000 level. So this is you are feeling some sort of losses, right? So this will call OTM out of the money option. So these are three categories: in the money, out of the money, and at the money. So when you buy in the money option, how much you have to pay? At the 10:33, let's say I enter in the trade in the spot chart, and at the same time I close the trade at 10:48 in the spot chart. What is the movement in spot chart? 336 point, right? And 336 point market moved almost 0.88%, right? Almost 300 plus points. In the money option, if you see, the same time 10:33 to 10:48 moved 230 points, right? You see here, uh, at the money option, in the money option moved, means this spot chart moved almost 300 plus points, but your in the money moved 200 plus point, right? 238 point. Same time at the money moved almost 194 points for the same interval, and out of the money move 122 points. If you talk about in the money option, if you try to buy, means that time the market price was somewhere around 900 rupees. So if I will fill 900 one, so you have to pay 22,000 rupees almost, right? And at the closing time, right, when I spot chart we are exiting, at the same time option chart when you exit, the price was 1143, 1143, 28,000. So 22,000 to 28,000 means almost 6,000 rupees profit, an approximate number I am telling you. Almost 6,000 rupees profit you made in the money option. At the same time, when you go for at the money option, you have to pay 14,000 for the same trade, which you paid 22,000 for in the money, where in the at the money you are paying almost 14,000, and profit was 19,000. Means total, the means you are exiting at 19,000, price. So your profit is 5,000. Your profit is 6,000 or 6.5 thousand. At the same time, at the money, out of the money, you paid 8,400 rupees and you exited at 11,400 rupees. Here profit is 3,000. So in the money profit will be more, out of the money profit will be very less, and moderate profit will be at the money. But profit percentage wise, if you check, in the money is 26%, at the money 33%, and this is 36%. So out of the money option, right, their changes are very fast when, especially on the expiry days, right? So don't think in terms of profit, think in terms of losses as well. Right. So this is the difference between in the money option, at the money, and out of the money. If you ask my suggestion, I mostly, let's say it's running at 38,000, so I mostly look for, 100 points, up and down options. Let's say 38,000, so I will look for out of the money, which will be 38,200, like that, 200 point gap. That will be, moderate movement, or sometime at the money I also took. So this is how we decide, which strike price we should go. uh, at the money, if your view is right, you will, even your view is moderate, at the money is okay. If your view is absolutely right, then you can go for out of the money. Their percentage return will be very, very high, no doubt. And in the money, if you want to scalp, your view is right, at least for, 1 minute or 2 minutes, you are being right in the trade, you will make some money very quick. But in the money could be riskier as well, you have to pay more also here for the trade, right? So this is all about in the money, at the money, and out of the money, ATM, ITM, and OTM options. These are three categories of option. Okay. I hope you are clear with this.